Hotspotting is buying in an area where it's anticipated to be quick growth. It's often regional and industry related, with the anticipation that you'll be able to go back, borrow the funds against it and reinvest. So you can build your portfolio quickly. If you're intending to grow your portfolio quickly, the first decision is the most important. And this is certainly how I built my portfolio quickly, was that population growth, the places tend to stay hot for 2 or 3 years, so you don't need to pick the bottom. If places start moving after being flat for a while, such as Sydney has now, that's a good, it's like planting a tree. So I've replaced that with Port Hedland because, as I sort of showed, as I put that up as an example last time, that's been like the dream hotspot from a low base. So we might as well look at what factors were in place there to see what happened. So this is, Port Hedland, it's on top of WA, median house price sort of 800. It's average 20% per annum. 2000, the median was 140.
A year ago I had to write an article for Your Investment Property magazine. The topic was how to pick up bargains in a soft market. Just this week I wrote another one, and the topic I had to write on was how to buy well in a hot market. So totally different landscape that we're in today, and the market has changed. And that's why we're leveraging our client base by buying blocks of apartments and doing a joint renovation. So we're avoiding the competitive market out there at auctions. We're avoiding the emotional home buyers that are bidding at these apartments, and we're also avoiding the small-time investors, some of you here and others. So we try to create a strategy that is basically providing these opportunities. Melbourne's population growth is a big driver at the moment, so what we're trying to do is, because of all these factors, we're trying to create better opportunities where we can get wholesale property purchases rather than buy retail. And again, why did we choose Reservoir? We looked at the growth, and we looked at Preston, we looked at Thornbury, and we looked at Coburg, and then we looked at Reservoir. We saw the growth stats were a lot lower for Reservoir. So we think there's going to be a good flow-on effect. One of my other key investment factors is I only buy properties where there are period houses. And why do I do that after 15 years of buying real estate? Because I know that if you've got period houses there, it's going to attract young professionals in the area who've got the cash to do the houses up, which is going to increase the value of the houses, which is then going to increase the value of the apartments, which is going to then have a big upside. So it's all about seeing how we can get a property, the ugly duckling, and try and add value to it and create that equity. And our clients keep coming back and getting and using that equity, so they're not using their own money to fund their jump on our website and have a look at Footscray. If you're not thinking of investing in the West in the next 5 years, I can tell you now you've got rocks in your head, because the potential there for growth.
Okay, now so what's happening in the Sydney property market? Really hasn't done much for the past few years, unlike I was listening to what's happening in Melbourne. Sydney's, last year it went up from about 6.9% at the end of the September quarter, but for the last few years, since about 2003, it sort of stayed like this, even went like that in some suburbs. So really went a little bit backwards, but stayed pretty level. But as of last year, things have changed. Sydney is now in a position where it is in a rising market. It hasn't peaked, like Melbourne. It's going to peak, but it hasn't quite got there. Okay, now let's talk about the Sydney hotspots. What creates a hotspot? New infrastructure, railroads, new roads, things of that nature. Shopping centres, population growth, jobs, and lifestyle trends. People see change, treat change. Paddington, because it was the cafe culture, those sort of things. It says units and freestanding or attached houses. And if that's what you're looking to buy, my prediction is that you should be looking at suburbs within and surrounding the Green Square town centre. Be looking at North Ryde, and West Ryde. And you should be looking at suburbs with schools in the new website top 20 list. And finally, I don't have a crystal ball, but really the economic indicators are there. And if you're thinking of investing, I think now's the time to invest in Sydney.
Here we go, it's me. I haven't made any money through working 9 to 5. I've made a bit of money doing this, which is what we're all here for, which is good. We're using the equity in the home to start the investment strategy, and to I started in 2003. I had Anthony come around, and we sat down and worked out, well, how much can I borrow? And I just went bang, 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 4 in probably about 2-3 months. So we're looking for properties with good rental returns in areas likely to have quick growth. Really, I was looking at the rental returns, etc. First one I got was Mackay in 03. I probably beat Anthony and to Mackay in 03.
The first one, you know.
I was, believe it or not, 92,000. And the rent I was getting back then was 130. So I looked at that, and oh, 2 bedroom, looks pretty smart. So these places I'm looking at for the first 4 that I got was based solely through the internet. Did not go and see them. But I actually spoke to agents up there. What do you think of this place? You know, just basically, you know, got some information. So it was a bit of a risk, but with the rent was going at 180, 120. Cost me was paying for itself.